Happy New Year, everyone. The big question on everyone's mind is where the stock market is heading for 2025 and beyond. Can we hit those long-awaited highs, or will corrections take us by surprise? Let's go. In this video, I'll break down exactly what's coming and why these details are critical for traders at any level. Last year, at the end of January, we saw all-time highs. If you watched my video back then, I explained how this eliminated the bear crash wave and confirmed we were in the final bull wave of a much larger five-wave structure dating back to March 2009. More specifically, we've been riding the third wave. Historically, the third wave tends to be equal in size to the first wave, or about 62% longer. As soon as we surpassed the size of wave one this year, I went full bull with an extended wave target of 612 on the SPY. Now here's where it gets interesting. We didn't quite hit 612. Instead, we peaked at 609. While we could dive into lower time frames for explanations, let's focus on what I've already shared in the Discord. By the way, if you're not in my Discord, you're missing out on real-time updates that are vital for navigating these market moves. Join us to stay ahead of the curve as signals fire every hour on the half hour, and I share exactly what I'm doing in real time. Comparing today's setup to late 2021 and early 2022 reveals something crucial. Right now we have a triple divergence on the MACD where prices push higher, but the MACD puts in progressively lower highs. The last time we had a similar setup, it led to one more exhaustive move higher. During this phase, the percentage of S&P 500 stocks trading above their 20-day simple moving average soared from 20% to nearly 90% in just a month. This suggests that short-term, the market is getting oversold and ripe for one last rally to new all-time highs before rolling over. Comment below if you think this rally will happen and tell me why. Looking ahead, I expect SPY to hit 612, potentially right before the upcoming inauguration. However, after this pump, I anticipate a corrective wave lasting a few months into 2025. This will create a critical buy the dip opportunity, as we'll have one more impulsive wave left in this epic bull run. My target for this final wave is 650 by April 2026. After that, things get tricky. A larger corrective wave could stagnate the market for years, much like the running flat we saw after the dot-com boom peaked in 2000 and dragged on until the 2008 housing crisis meltdown. This is why understanding the bigger picture is essential. Subscribe to my channel now for regular updates and strategies to navigate these uncertain waters. To sum it up, here's what I'm watching. A potential last rally to all-time highs before a rollover correction in early 2025. Depending on the retrace, we're either holding bullish at 540 or dipping lower to 485. Either way, the bullish momentum into late 2025 remains intact. However, the second quarter of 2026 could mark the peak of this cycle, signaling the end of this historic run. Let's discuss in the comments, do you agree with this roadmap? Are you prepared for what's next? And on that note, thanks for joining, as that's all I have for now until the next video, and we'll see you then.